Well, guys, it's happening. Gold is dropping down about 1% at the time of recording this video. You can see gold has slipped down to a price range of $2,613 an ounce, which is a big slide here from the recent unstoppable uptrend that it seems it has been on. And in today's video, I'm going to be discussing why gold is down and why I think it may actually have room to continue lower. Let's talk about it. So if you were here yesterday for the video that I put out, I discussed that the Edgefinder just recently printed a bearish reading on the gold chart. In fact, if I go over here and I look at metals, gold actually does still have a bearish reading, and the Edgefinder's been pretty spot on with gold this year, I gotta say. It's been pretty bullish for most of the year, but just recently, and beautifully before the drop, mentioned that, again, gold is giving us a bearish reading. Now, why is this? Why is the Edgefinder signaling bearishness, and how did it kind of forecast this? Well, nothing is a crystal ball, of course, and the Edgefinder's not a magic money printing machine, but it's pretty dang good at scanning market data. And what we can see here is that we're entering into a seasonally weak period for gold, and some of the recent strong economic data, which we've covered on this channel over and over, has been pointing to gold bearishness. One of my favorite pages on the Edgefinder is the gold and silver data scanner, where we can look at all of the different economic data and specifically see how it impacts gold and silver. So when we take a look at GDP growth, which came in line with expectations, that's not a big boost, but the big ones that I want to point out are these numbers down here. NFP, unemployment rate, both of these variables are showing strength in the labor market, which is giving us a bearish signal on the Edgefinder. That is why the overall signal from the Edgefinder is and still is bearish overall. But now something pretty big is happening. This level of support on the 4-hour chart is now looking like potential resistance. And beautifully, we do see the big drop here taking out this low. And depending on how this candle closes today, if you get a really solid bodied close candle here, any retests, in my view, would be potential opportunities to look for short setups with very careful risk management. Because let's remember, gold is still in a very strong upward trend. Take a look at the weekly chart and you can still see this thing is a beast mode overall. That being said, I do think that gold has room to perhaps break this, trajectory, which is an unnaturally, it's not going to stay going up like this at the same rate forever. It's going to have pullbacks. It's going to have corrective periods. And I think that what has potentially triggered this move lower is the economic data coming in a little strong for the US dollar. Notice that, guys, we take a look at the USD, take a look at DXY here, which is the dollar index. It's showing some really solid signs of a potential breakout. We broke this downward trend line, nice follow through move, and now we're up here at resistance. We may see a bit of a pullback possibly, but in my opinion, if we continue to see US economic data come in stronger than expected, the US dollar might have bottomed out for the year and potentially goes higher from here. So we'll see if that is the correct idea. But again, a strengthening US dollar likely is not a super positive thing for gold. Now, let me say this. I'm not outright bearish on gold for that forever, right? I'm just saying that right now, economic data coming out stronger than expected is going to weigh on gold's price a little bit, which typically goes up on a weaker dollar and weaker economic outlook. By the way, if you'd like to get access to the Edgefinder, there's a link and promo code down below in the description. For our subscribers of this YouTube channel, you do get an extra discount if you use code YTVIP. Also, if you have any questions or you'd like to sign up for a payment plan, or you'd like to pay with crypto, or you just want some more information about how the Edgefinder functions, or you'd like to get our free course on the Edgefinder, the first link in the description is your best friend. If you send us a direct message, someone from our support team who is a real person will let you know how you can find out any details you want to know about the Edgefinder. So another catalyst today is the ongoing sell-off that we're seeing in commodities in general. Take a look at silver, down 4.25% while we're recording this, 5.4% for oil, huge reversal moves on things like copper as well. And why is this? Well, China holds the key. The Chinese stock market, which has been on a tear to the upside recently, has been arguably very positive for outlook for demand for commodities because China's economy is super manufacturing heavy. They typically do demand a lot of raw materials, commodities, iron ore, copper, silver, oil, all of that gets in high demand when the Chinese economy is, moving and grooving. So when we look at China coming down hard today, we have to ask ourselves why. I'm pulling up this article. It says China's stock market resurgence hits a roadblock on lack of new stimulus measures. Basically, without going into too far of the details, Chinese investors, or Chinese stock market investors specifically, were looking for huge amounts of stimulus to buoy the stock market out of its dumps that it's been in for a long time. And while there's still probably some pretty good expectation for a potential rebound in Chinese stocks, any contrary news, meaning maybe not as much stimulus as previously expected, or not as good news as what was expected, comes out, it's going to hurt the story. That being said, you still have to remember that from the lows, this Chinese market rally is still up substantially. 30 to 40% in just a few weeks is actually just crazy. So really big moves there, bit of a correction, and dragging down commodities with it here today. That is pretty much the story. That being said, I do like certain commodities more than others. Like oil to potentially get long might be a setup that I take inside of our VIP channel. So if I take any signals, you guys will see it inside of our signal service, which is linked below. There's also that promo code YTVIP for signals discounts if you're interested in that. But when I look at this and I say, okay, look, Chinese stock market is still in an overall nice, kind of recent surge. I think that could continue. But what I think also could continue is the US stock market, which is doing well today, could continue to trend upwards as it has done for most of this year. The US economy, we saw jobs data being pretty strong. You've got a good story there that I think could be a good tailwind for oil prices going forward. That being said, we do have an election around the corner, and that is worth mentioning. Today on the live stream, I also got a very interesting question because I mentioned the Edge Finder earlier. Sometimes people wonder if the Edge Finder is built specifically for day traders or not. And most of the time, people actually think that fundamental analysis does not apply to day traders or scalpers. And I very much disagree with that. Check this out. Is the Edge Finder for day traders and scalpers? That's a good question. The answer is, it depends if you're somebody who actually wants to use fundamental analysis in your trading. If you want to understand and utilize fundamental analysis, fundamentals, by the way, are absolutely relevant to day traders. There's this rumor out there that if you're a day trader, fundamentals don't matter to you. And that is absolutely false. A good day trader absolutely can take advantage of fundamental analysis. Do you want a quick example, a recent and very strong example of why fundamental analysis is super beneficial to day traders? Look no further than the recent economic data we saw in the NFP report. On NFP day, we had a massive beat in expectations from jobs. If you understood the full reading of the NFP report on Friday as a day trader, there were opportunities galore to look for scalps and day trades in favor of the US dollar, or perhaps in the short run, maybe you found some short setups on gold, maybe you went long stocks. My point is, absolutely fundamentals are for day traders. Day traders can massively capitalize on fundamental analysis. Scalpers may also be able to if you really know your stuff. Swing traders, obviously, that's what I do. I think, fundamentals are massive. But if you can recognize as a day trader what is happening in the financial data, absolutely, you can spot opportunities and trade them on the lower time frames. So let's go take a look really quick at the DXY, and let's go look at what happened on 8:30 on Friday. So at 8:30, you had, let's go to the 5-minute chart as a day trader, right? Can we even go find, there it is. All right, so as a day trader, if you recognized, oh my gosh, we just had a killer 5-star jobs report. It may have been tight and you may have been scalping in this, but you totally could look for opportunities. In my view, in my opinion, I'd be looking for long setups throughout that day. Any dips, I'm looking for maybe weaker currencies versus the dollar to trade. If I'm an FX trader, I could potentially look for possible shorts on gold or metals if there's the right setup there. My point is, if you know how to spot how important a fundamental force is, sure, that force might play out in the weeks to come, but there's going to be a sharp and harsh reaction in the short run that day traders absolutely can maximize potential out of by trading that volatility. So there's this theory, there's this rumor that day traders should just ignore fundamentals, and I think that that is absolutely wrong. Fundamentals are for everyone, and day traders totally can maximize potential gains by understanding how important a news data point is and riding the wave when you spot it. Does that make sense? If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.